Hi, my name is Fan Yang. Welcome to another edition of CMS Forex News. Today is Thursday, October 9th, 2008. The ECB furthered its efforts against the credit clog by offering banks unlimited cash and pumped a record $100 billion in overnight funds, while other central banks such as the Bank of England and Bank of Canada have pumped money into overnight funds as well and continues to do so. The pound-yen pair gained overnight and into early morning trading. Asian markets were mixed, while European markets ended up slightly down. The Dow plunged for the 7th day after opening higher. Following the 500-pip overnight rally coinciding with the rallies in both Asian and European markets, the pound-yen pair reversed most of those gains by 3:30 p.m. Eastern as bearish sentiment settled in. Business investment continues to deteriorate in Japan as the core machinery orders plummeted 14.5% on the month in August, the largest decline since July of 2007. The Cabinet Office also released poor machinery tool orders, which was down 20.7% on the year. Both numbers reflect the global slowdown and the weakening business sentiments in Japan. The Australian economy added 2,200 jobs in September. The lowest increase since May saw 19,700 leave the workforce. Although this did beat expectations, the job market looks to continue weakening as commodity and export demands are declining and business confidence worsening, albeit a slight rebound in September. The unemployment rate edged up to 4.3% from 4.1%. The Aussie made a 500-pip rally on the greenback before pairing some of those gains in New York trading. Australia is a major exporter of commodities, and like Canada and New Zealand, their currencies are pressured during global slowdowns. Germany's trade surplus widened from 11.6 billion euros to 13.1 billion euros in August in seasonally adjusted terms. The unadjusted data, which is more sensitive to the domestic and global slowdown of late, saw the surplus narrow. The data backs up the rhetoric that the Eurozone is slipping into a recession. Also, from Germany, the wholesale price index reinforces the argument that inflation has already peaked. The September figures show a 0.6% decline on the month, following a 1.8% decline in August. The annual rate peaked at 9.9% in July, subsided to 7.4% in August, before hitting 5.8% in September. From the UK, the Halifax Bank of Scotland released housing data for September. Data showed a drop of 1.3% on house prices on the month and 12.4% on the year, the sharpest annual decline in 25 years. Mortgage rates have fallen, but banks are still reluctant to lend, limiting the pool of buyers, while the pool of sellers are pressured to lower their property prices. For August, British trade deficit in goods matched the downwardly revised figure from July, remaining at £8.2 billion. The trade in both goods and services showed a deficit of £4.73 billion. Both exports and imports declined, reflecting weakness in both internal and foreign demand as global economy drags. The pound rebounded on the dollar overnight, only to fall sharply in New York trading. The overnight rally was due to some return of confidence in the British financial markets, but bears overwhelmed at the end of the session. The greenback continues to gain from the flight to safety, beating its rival in the euro as well. In the U.S., there were 475,000 new jobless claims in the week ending October 4th. This was slightly lower than last week's 497,000, but remains elevated. Continuing claims continued to climb, reaching 3.65 million, and suggests that unemployed is finding it harder and harder to find another job. The release of U.S. wholesale inventories finished the string of bad data today. The 0.8% increase, which was higher than forecasts, suggests that the slowdown is forcing the middlemen to hang on to unintended inventories. Sales, which were down a flat 1%, fell the steepest since January of 2007. The dollar-yen pair rose late evening, traded in range overnight, and then plummeted in late New York trading. The Dow's short bull run was overtaken by bears, extending the sentiments from the end of the European stock session. Not seen in this chart, the pair continued to fall another 100 pips an hour after breaking below the overnight range. The Canadian dollar is devaluating at a significant pace. The USD Canadian dollar pair rose another 250 pips and continues to pressure the loonie, a commodity currency. It is usually the case that commodity currencies such as the loonie, Aussie, and the Kiwi decline during these times of global slowdown. Tonight, the Bank of Japan releases its meeting minutes. Overnight, Switzerland posts its unemployment rate. Tomorrow, Canada releases its unemployment report, trade balance, and new housing price index. The US, meanwhile, posts its trade balance and import price index. That wraps up the day in Forex news. Join us again tomorrow as we wrap up the week right here at cmsfx.com.